Now, there are many different kind of investments in the stock market, some riskier than others. And today I want to give you an overview of which investments are the safest kind. So if we have high risk down here, low risk up here, I'm going to start off with investing in small companies. So that's small companies. Small companies are growing and they're basically in a go big or go home phase where there's potential for big profits but also for big losses as well. Small companies have not established themselves in the market, they're still trying to build a brand, and there's a lot of risk involved in this phase. Now the next is going to be investing in large companies. Now, large companies are well established, they've been around for a long time, they have a stable management, stable line of products, a good brand, etc, etc, which makes it a lot safer. They're basically not going anywhere in the next 5 to 10 years. And some big companies also pay out dividends which can lessen the amounts of risk. The next is going to be investing in a stock fund. So that's a stock fund is a group of stocks where you get the average of all of those stocks. This is obviously a lot safer than investing in one company. One company can go way up and way down in just a couple of days, but in a stock fund you might have 100 companies and you get the average of all of those companies, and it's pretty obvious that it's going to be a lot less ups and downs and a lot less volatility when you have 100 companies instead of one large or one small company. Now the safest way to invest in the stock market is a kind of stock fund, and those are called ETFs. ETF. Those are three very important letters if you want to safely invest in the stock market. ETF stands for Exchange Traded Funds. They are a kind of stock funds and they can track anything. A certain country, a region like the US or Europe, an industry like finance or technology, or a certain market cap category like small cap, medium cap, large cap companies, and you will get the average of that category. The safest kind of ETFs would be index ETFs. Maybe a global index ETF, which consists of the 1,000 largest companies in the world, and you get the average of all of those companies. And that is by far the safest way to invest in the stock market. So look for global or regional ETFs. They are very safe, cheap, consistent, transparent, and anyone can invest in ETFs. They're available for absolutely anyone with access to the stock market. So if you want to learn more about small cap, large cap stock funds or ETFs, or how to control risk, how to deal with risk, or any of these topics, you can go over to investingforall.net.